Now, the week that was has seen some optimism in the market as the odds of a double-dip recession in the US narrowed a bit. George Lucas joins us now from Instreet. He's with me in studio this morning. George, great to see you.
Hi, thanks, Brooke.
Expectations for that double-dip recession do seem to be pared back a bit. Not entirely because all the news has been great. There has been some negative news out there, especially the ISM index of the US. Why do you think the market is concentrating on the good news for the moment?
I think we had 3 weeks of bad news, and the market concentrated on the bad news, and then the PMI numbers, so both out of China and the US, were good, and that kind of lifted the market, and it lifted a lot of this pessimism on the double dip type scenario, and there was a lot more certainty that maybe we'll just get low growth, and I think then the market was much more set up for to handle the bad number on the ISM service number that came out in the US, even though the employment number was quite good. I mean, the employment number actually, sorry, let me rephrase that, wasn't that great, but the expectations were so low already that it came in well above a very low expectation, and so the market took that very positively.
And just detail why you say they weren't great. I know that, I mean, if you look at the part-time, full-time split, that's one aspect. All the jobs were part-time. Obviously, hours are being cut back.
Yeah, first of all, they lost 54,000 jobs. Just to keep the unemployment rate stable, they really have to be generating 100,000 jobs a month. So they're well below keeping the unemployment rate stable. And two, you know, with the level of economic growth we're seeing, we would be expecting them to be generating 100,000 jobs or more at the moment, which they're not doing. And the other bad piece of news was the manufacturing sector actually fell, and at the moment in the US, you know, all hopes are on the manufacturing sector taking off and being the centre that drives the US economy back out of the current recession, and the unemployment level fell in the manufacturing sector.
Okay, so are you giving any less chance in terms of the last couple of weeks of that double-dip recession, whether you believe it or not? I mean, has the status quo actually changed in terms of changing a view about how this pans out?
No, not really. I think the risk of the double-dip recession is, I don't really think there was we didn't think there was a very big risk of a double-dip recession anyway. So I think the market's just getting a lot of the pessimism out of it. I think there was a lot of fear factor in the market, and I think these numbers are just reflecting that this fear factor is alleviating from the market. And we also saw that in China. The PM numbers in China were very good, and the market's been very focused on that maybe China won't be able to generate enough growth to keep the world economy going. And it looks like, you know, a lot of that fear was taken out of the market as well with the Chinese numbers that came out.
Can I get a quick thought on the US dollar as well? As we saw the improved sentiment last week, we did see the US dollar quite depressed. All of those the commodity currencies like the Australian dollar picked up the ground. Does that make sense to you? That's okay?
Yeah, that makes sense. And I think there's you know, whether it's a written policy or a stated policy, I'm sure the US is quite happy that the US dollar continues to be weak. Because, as I said before, they're very keen to boost their manufacturing sector, and one of the ways to do that is to keep the US dollar weak. And we're beginning to see those tensions come back between the US and China, and we're looking for it to become actually a political issue coming up into the midterm elections, and the noise again about the Chinese not really letting their currency appreciate enough. So I think the US are very keen to get their dollar down a bit, especially against the renminbi.
How do you think that will play out? Because experts still will always say it is in China's interests to let that yuan move and to let it appreciate, but they just don't want to do it to the US tune, or march to the tune of the US, I suppose. And
also there's been a lot of internal lobbying inside China from exporters on the Chinese government, trying to keep them from appreciate the currency too high. But the next risk, which will come out to where the Chinese will make them focus again about whether they should appreciate or not, is food inflation. And there's a lot of signs already coming out that there's going to be quite significant food inflation in the world. We've seen the grain prices rally quite strongly. We've seen the meat prices rally quite strongly. In Africa, again, we're beginning to get riots over the price of bread. And one of the ways that China can control this internal food inflation is from actually letting the currency appreciate. So
you've got very mixed factors there in terms of how what way it goes. Okay. Can I ask also about the equity markets generally? We're into September now. We always expect historically that September will be a rough month. You believe that'll be the case this September?
Even though we've had a very good start to September, one of the reasons why obviously is because the US holiday, so the end of summer, which is this weekend for the US, where they have a long weekend, was a bit later into September. But we still think September will be quite rough. I mean, we've obviously seen the market's had volatility. It's just been on the upside, which is great and it's fantastic. And it'd be really good if it could continue. But, you know, generally you got to say September's quite a rough month, and at the moment there's nothing really which indicates that it's not going to be like that.
So you expect weakness?
We do expect weakness. It was only if the markets can break above these levels would we start to turn positive.
What levels specifically are you watching?
Well, in the Australian market we're looking at the 4,600 level, which we're getting very close to, but the last time we got up to this level it turned around and fell back very quickly. And in the US we're looking at 1130 on the S&P 500.
Okay, because the S&P 500 has been watching that 1040 level, keeps bouncing off it.
Yeah.
Has that been a positive sign for you?
That is quite a positive sign for us, but it also, when it gets up to this 1130 level, it also bounces down very quickly. So it's just range trading. It is actually quite a good sign that it hasn't broken the 1040 level significantly, but you know, we just really have to wait for this US election to go out of the way.
I suppose something that would make a big difference to the market is this issue of quantitative easing, whether the speculation is completely put to the side or whether there's some suggestion that that would be reinstated. Do you think that might be decided in the next month?
No, I think they're going to hold off again on making a decision on the quantitative easing, but what we might see is some more political talking about fiscal stimulus in the lead up to the election in the US and ways to generate more job growth in the US. And I don't think people believe that quantitative easing will be enough to generate job growth in the US.
Can I also ask you about the Australian banks? Because I know you're talking with financial planners and people in the industry all the time, and you say that people keep coming back to this issue of the margins that the banks have got at the moment. Just tell us what the kind of big discussion that you're having is.
Well, yeah, they were talking about the margins and whether the banks are actually got higher margins, and what seems to be happening is that globally the world doesn't want to lend to the Australian banks because of their exposure to the residential property market. Whether it's true or not, they tend to have this negative view on the residential property market in Australia, and so they feel that they have to charge a higher margin to the Australian banks when they lend to them because of this exposure that the Australian banks have. And then the Australian banks then will need to pass that through as higher margins on mortgages, etc. And at the same time, obviously, the Australian banks are trying to diversify themselves away from overseas funding methods by increasing their Australian depositors. And to do that, there's quite a lot of competition, and that keeps the rate up. And that's why you can get very good rates on term deposits at the moment from Australian banks.
So you think that that might be something that could continue for Australian
It will continue for
investors?
Australian banks until overseas becomes a lot more comfortable with our residential property market situation, or until the Australian banks begin to basically securitise and sell off these residential mortgages off their balance sheet to reduce that risk.
And this issue of the Australian residential property market being overvalued, and I know Morgan Stanley's being a vocal proponent of the idea that we will see some sort of pullback and even suggesting trading strategies to profit from that.
Yeah.
What is your view on stocks and investing in that sector, or being exposed to the sector?
Well, just as, in the banking sector, for example, you've just got to be careful because obviously when the foreign money does come back into the Australian equity market, they're still not going to go back into the Australian banks, just like they don't want to lend to them, they're not going to invest in the Australian banks. My view on the residential property market is probably not as bad. You know, I don't feel it's so overvalued as a lot of the overseas clients do, but there's overseas money is not going to go into that market and push it up significantly.
So if foreign investors don't want to be involved in the banks, and we've also got the mining tax issue, which has put off offshore investors as well, what picture does that set for international investors' involvement in our market?
Well, at the moment, a little bit dim, and that's always been an issue for since May, that so much of the Australian market has these clouds hanging over it just from a regulator.
Huge sectors.
Yeah.
Okay, something to watch. Thank you, George Lucas. Much appreciated. Great to see you.
Thanks a lot.
George Lucas there from Instreet.